With a hawkish Fed minutes report and no clear indications for a rate hike pause on the next run, the markets remain bearish and prices continue their descent. Our original projections for a bull trap and sell-off have commenced and show signs of conditional recovery. Welcome back on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill 'em, team. What is up, you guys? Thank you so much for stopping by once again. We're going to be looking at ticker symbol FNGR for a potential recovery. And there could be a recovery here, but it is going to be entirely conditional, just like I said in the introduction. Conditional why? Because usually when we break key supports, we tend to come back to them and use them as a resistance validation. Short sellers use that as confirmation and, just to open up short to take the price down to a certain level. Right, so during the live stream today, I was able to modify the pennant's support line based on the 150 capitulation that we saw. Actually, I think it was 149. Let me see, what was that low? A low of blah blah blah. Yeah, it's actually this candle here. Low of 450. Apologies, did I say 150? Yeah, anyway, so we got that 450 touch down there. We were talking about a potential drop to 428 based on, we didn't have this support touch back then, right? So we were talking about this up here and speculating that we would see a 428 bottom. So I'm not ignoring the 428 bottom. In fact, I am probably welcoming the touch of the 450 yet again. And the reason why I'm saying this is because we're currently validating this zone, which was our previous demand area, and our EMA 55, we're kind of validating these as resistance before a continuation to the downside. So if anything, when you knock on the door of a moving average like this after breaking down it does usually require a few touches here, or a couple touches at least, in order for us to kind of be convinced here that bulls, in fact, do not have all the strength in the world, and a downside could be more imminent than not. And this is judged based on, just raw price action itself. And I really mean that, in the best way I can, right? So first of all, remember that we were speaking of, I even got faked out, right? But regardless, this is something that we were looking at as a potential premature breakout, right? We noticed that we didn't have the second touch of the support bottom here. And in order for us to kind of validate the formation, the pennant itself, we do need two touches of the support. So of which we potentially have now. Right, so let's go ahead and see what the potentials for a downside are. Right, so, you know what? One more thing. I actually was talking to somebody on the phone, and I was explaining how the support lines are starting to match very well. So if you can look at this, the daily time frame, let me get rid of the moving averages, right? So take a look at this. You see how we're matching pretty well on the support line? We have the contacts right here, right? So now if you go down to the 12-hour, you see that we still have the contact points, right? We're still in that regression. Now, if you go back on the 8-hour, take a look at the contact points. They're still there, right? 6-hour time frame, contact points are still there. They're very much valid. The 4-hour time frame, of course, we still have the contact points very, very much confirmed. 3-hour time frame, same situation there. Bi-hourly time frame, same situation there. And now you just slightly deviate on the hourly time frame, right? But for the most part, it is still there. So what this is telling me is that since we have so many time frames suggesting that was the bottom side, I don't know if you've ever tried it for yourself, but if you've ever tried to draw a formation on your chart and then you change the time frame, your lines get all messed up. Well, in this case, you can see that it's not. The lines are definitely not getting messed up, which indicates some accuracy to the drawing. So if that is in fact the case, then what could we be expecting here? Right. So like I said, the broader markets are feeling a bit bearish. We have to keep an eye on the major indices here because they're gonna essentially manage or mitigate our price action too, despite the volume and despite the the bull or bear case here within the asset. Right. But what I do know is that it was kind of required for us to come down here and validate a support. Let's move on to the next chart and see what we have. Let's see. What would I like to talk about? Great. So yeah, this candle here, we just recently printed it, right? And this was suggesting for us to come back down to the area of a newly converted resistance into support. The bottom side here, of course, we faced around that 450. I think that it would still be okay for us to flex down here. There's not going to be a new candle printed here. This still needs close to 9 hours. I'm sorry, 9 days to close. Right. So I do think that it's still appropriate for us to assume that we can still fluctuate within this candle here. Right. So and still remain safe. So now I know a lot of people were actually asking me about the bi-daily golden cross, and I do have to tell you that it's actually still there. What we're facing right now are pressures from the outside world, right? So remember, we just got a negative read on the China economic report. We also saw a negative read on Russian reports. So it's a dog eat dog world out there, and to see FNGR still within this upside realm, I am pretty impressed by the price action, right? So yeah, we still have the bi-daily golden cross. It did happen just yesterday, and nothing has happened. But what I can't tell you is that tomorrow the new bi-daily iteration or the new candle will open, and we will see what would happen to the golden cross there. Usually it takes a lot of pressure for us to invalidate entirely, but like I said, we'll take a look at that tomorrow. All right, so anyway, yeah, I wanted to go ahead and touch down on a little bit of GTII because it is kind of going back to the zone that we kind of talked about here, right? So now that we're there, remember I was telling you that we could potentially see the a continuation to the downside here, to particular 70 to 69. We're getting dangerously close to that now, team. So keep your eyes peeled on that. All right, and it's really showing that there is price action, to the downside here for both of the assets, and they're kind of rhyming together, right? So I just want you to be careful here. All right, team. So let's move on to the next chart and see what the deal is. 482. I don't know if you saw in the price action after hours, but we ended up making a bounce to the area of about 495. So if we know that 495 was the area that it went up to and rejected, we will go back and take a look at that. So, but for now, let's go ahead and see what we can do about the price action in the RSI. So, okay, 30-minute time frame. Let's evaluate this as close as we can. I'm talking about let's really dive in and let's see if we can catch an edge for the price action tomorrow, right? So, okay, we have the 30-minute breaking upside. We have the 30-minute RSI signal, cyan line, breaking upside of the SMA 14 represented by the pink line. That's a bullish statement short term though. Right. So now if we look at the 3-hour and the bi-hourly, we're arguably at a little bit of resistance. Right. So what I'm seeing here is that the 3-hour being a larger time frame, this would essentially, work as a resistance touch here. So the signal line would essentially move up, face the resistance from the SMA 14 and the gravitational zone right here of the bear weakness percentile, and then fail. So in a shorter time frame, that would indicate that we would be using on the bi-hourly here, we would be using the gravitational zone to succeed the upside of this SMA 14, and then we would face a little bit of resistance coming into the gravitational zone of the bear weakness percentile, and then we would continue to the downside. Right, so in this downside here would it's in essence be influenced by the larger time frame 3-hour, right? So literally just like that. And now in this case here, it would be the RSI signal, find the resistance from the gravitational zone here, and then reject. So they're pretty alike. All right, so now the 8-hour time frame and the 6-hour time frame are essentially consolidation, right? Because this is still within the gravitational zone here, and it bounced from it, so which means that we may be stuck here for a little bit until the shorter time frames do show some buy-side liquidity or conviction or sell-side conviction. So we'll evaluate that as well. Now, the daily time frame is resisting from the SMA 14 and continuing to the downside. It has slowed down in respects of the gravitational zone here, so it may succeed just a little bit. But in all reality, it may also be some consolidation. All right, but remember that this is just what the RSI is saying. It does not mean it can happen, right? At any moment, there could be some pretty good news, and this thing can just launch to the moon, and then we'll be all good, right? So now, moving on to the 5-day time frame. This is telling me that downside is limited, and it's limited in a respect in these respects. So we actually have the RSI signal slowing down its downside pivot. The RSI, the SMA 14 is coming up. We would use that SMA 14 as a bounce, and guess what? We're in the gravitational zone of the bull weakness percentile. We'll use both of the gravitational zone and the SMA 14 as a gravitational bounce, and continue onwards and upwards. But it is the 5-day, which means that whatever downside and whatever pressures that we're facing currently are in essence going to take a few days here. And I'm not sure if it's going to go beyond Friday, but I would kind of speculate on that, right? So now this puts my, I don't want to say that, in fact, because this puts my August 18th calls in danger, right? So I may actually have to, in my margin account, I may actually have to roll over those options. Not financial advice. Okay, team. So now knowing that we have this limited upside, it sounds like what we were talking about is absolutely viable. Right? So, and also knowing that the 5-day RSI also gave us a limited downside, then our downside thesis is also viable. Short-term upside tomorrow, potentially, let's see the moving averages real quick. This is a little too far away, but what I can see here is that we can potentially face a bounce. I wouldn't say $5, but it is possible, right? So I'm just going to give you a range here. I mean, the 30-minute time frame is, I mean, it's dangerously close to there. Let me see. Yeah, I guess we can make it. I'll just put it up there like that. Let me go ahead and give you the range here. So I am looking at a potential, let's see, $4.97 to $5 resistance tomorrow before a pullback and a continuation to yet again the either the area of about, let me see, 4 hour. That's Thursday. Yeah, Thursday. Hold on, team. I'm just getting it tight so that we can have a pretty good play in line. Yeah, I would say between again 455 to 446. I do have to kind of keep that in mind, and we do have a lower end support area here, and I would actually have to show it to you per this candle top here. So that would actually give us 428, but just in case, right? Just in case we were to fail those upper supports, then we do have one more range of support, 437 to 428. Okay, it would still be okay if we wicked down here, right? But this is already following the thesis that we spoke of. It would be a spring and then an immediate reaction here. Apologies about that. So that is actually quick support all the way back down to 450, and we jumped immediately 15% to the upside to 518 today. That was immense. Okay, team. So that's why I'm saying that we could face a short-term upside, face rejection between the area of about $4.97 to $5, and then we would face a continuation to the downside here to face this support of 455. The range, remember, 455 to 446 with a potential wick or a shakeout to 428 to 437. All right, team. So yeah, that's kind of like what that's pretty much what I'm looking at here. Please take whatever I do, show, and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios. Yeah.